To keep you updated on the capital and financial markets, here is a recap of what happened.
Global securities regulators are adopting reforms to strengthen investment funds' ability to manage liquidity risks and guard against investor harm, particularly during times of market stress. The International Organization of Securities Commissions has issued its final report outlining revisions to its existing approach to liquidity risk management in open-ended investment funds, which dates back to 2018. Malaysia could end up among the biggest beneficiaries in emerging markets if the Trump administration's disruptive trade policies trigger a further sell-off in U.S. assets, according to a top executive at FIMM Group Holdings. We could potentially see a lot of capital freed up and move to emerging markets, Novan Amirudin, Chief Executive Officer of FIMM, Malaysia's third-largest bank by market value, told Bloomberg Television's Avril Hong. Malaysia has all the parameters that tick the boxes for investors as they look at asset allocation and investments, he said. After Chinese banks reduced deposit rates last week, Miro Chen launched a social media poll. When interest rates fall, do you save or spend? More than 80% of some 5,000 responses chose saving, underlining the challenge for policymakers seeking to shore up demand and economic growth. China's central bank eased monetary policy 2 weeks ago to limit damage from the trade war with Washington. On the 23rd of May, it lowered the ceiling for deposit rates to offset margin pressure on banks and prompt savers to spend or invest more. But successive cuts to deposit rates in recent years have failed to curb explosive growth in Chinese household savings, intensifying concerns over the side effects that lower returns have on the country's consumers, who tend to build their own safety net. The Federal Reserve has disbanded a number of internal groups set up to help the U.S. central bank identify and respond to financial stability threats posed by climate change. Among those dismantled are the Supervision Climate Committee and the Financial Stability Climate Committee, which were established in early 2021. That's around the time the Fed, under President Joe Biden, began to speak more openly about the financial implications of a hotter planet and increasingly erratic weather patterns. Former Fed Vice Chair Lael Brainerd said at the time that the two committees were part of an effort to build institutional capacity and knowledge on climate risks and vulnerabilities. Investment managers are launching exchange-traded funds that are badged as actively managed but operate more like passive funds that track benchmark indices, according to leading industry figures. These funds were misleading the market, with 88% of wealth managers and institutional investors accusing them of failing to live up to their active label, said a survey by Kahn Group, the third-party management company. Few active ETFs operate like traditional stock-picking funds, with many instead merely making small tweaks to their underlying benchmarks, a strategy dubbed as shy active by financial services group Morningstar. Watch the latest episode of Coffee Talk to find out about what is going on in the industry. Exclusively on FIMM's official YouTube channel. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.